Hey guys, this is Jason from Forex Varsity. Um, so today it's obviously another Thursday, so this is obviously the online mentoring, and today it's gonna be on Bollinger Bands. I'm sure you guys already know how to use Bollinger Bands, and I think I have done a video on it before, but I've made a recent discovery on them, and I've tweaked it a little bit. So what today, guys, it's basically I don't want you to trade just using what I'm showing you now. Obviously, we're trading our trading plan, trend level signal, we look for trend, uptrend, downtrend, and then we look for support and resistance, fib first, obviously, but Bollinger Band, as you guys all know, it's used for signal. Any indicator is used for signal. Any oscillator, well, oscillators, that can be debated because many people do use it purely just based to trade off of, but obviously, Forex Varsity, we teach you high probability trading strategies, and that is what I'm going to teach you now. It's just this, I like this because it's an extra confirmation that your trade could be working. Yeah, I'm showing you, and I'm sure you guys would like that as well. So the Bollinger Bands, guys, you can insert them with me here. Indicators, trend, Bollinger Bands. I know that you guys already have it on your chart, so but you've got 4 Bollinger Bands, so you've got 1, 2, 3, 4, so you've got 4 and then 2 median lines, so that's a middle line, and I'm going to show you guys, you don't need to use 2 of those Bollinger Bands. The same concept applies with these Bollinger Bands, and I'm going to show you. So it's just 21 deviation of 2. I'm going to just make it black, and obviously I'm just going to make it like that. Okay, cool. So I'm just going to delete the MACD and the stochastic. Cool, guys. So now with these Bollinger Bands, I want to show you how nicely this actually works. So you guys, I'm sure you guys understand. Okay, even if you don't understand, I'm going to just explain it quickly. So how to use Bollinger Bands. You see that we have 3 Bollinger Bands. This is the outer Bollinger Band. Both of these are the outer, what I call them is the upper outer and lower outer. So this is obviously upper outer, lower outer. This is a median line. So this is the average of price. That's like a moving average, and it's very good, guys. The first way in which, just about, this isn't going to be the bulk of what I'm saying, but or the most important aspect of what I'm saying to these Bollinger Bands. But if you notice, when price hovers, you see this middle line over here, going all the way here. That middle line acts as an average line. So you could see it as, well, you must see it as, if price is underneath, you should be looking to sell. If price is above, you should be looking to buy. So let's do a bit of back testing here. So buying, 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 then price closed underneath. Okay, you can look to close your trade. Yes, it gapped above, but that doesn't matter. At least we closed our trade. I mean, we would have been buying from there. This is just based, obviously, I haven't done a whole analysis or anything. So over here, goes underneath, and then you're selling, it hasn't closed above this median line, and then it closes above there. And can you see how it changes its trend? Over here, buying, 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 boom, down, sell, 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 sell. Over there, you can exit the trade and then look for another entry. So that's the first way in which you guys can use it. Hope that helps you guys a bit, just to give you a bit of a perspective onto the Bollinger Bands. Now, the upper outer Bollinger Band, guys, that acts as a resistance. This obviously acts as a support. So let's show you here. Can you see our price struggles to break above this Bollinger Band and close above it, and struggles to close below it? So if you have, say for example, you have a zone. Let's just say this was your zone over here, and then you see, okay, it's struggling to break this Bollinger Band, struggling to touch there, and then you could look to wait for it to go underneath, and then boom, there's a shooting start, went underneath the median line, and it was struggling to break the upper, which is, my fingers are up like bunny ears, it's a resistance. Okay, so guys, remember, if you have any questions, you can pop into the chat room, pop into the or you can email me or phone me. Okay, so now I'm sure you guys have noticed that the Bollinger Band squeezes. When it squeezes, like over here, can you see how it's squeezing there? They're all coming together. Let me just draw a ish. I've never drawn an arrow, but let me try. Okay, so that's quite a bad arrow. Okay, no, that was stupid. Over here, arrow up. Okay, so can you see how these Bollinger Bands are squeezing over here? They're coming together. Okay, and then that's called converging. And when they bubble out, it looks like a bubble, they're diverging. Okay, so when they converge, it means that price is going to, we can expect a breakout sooner rather than later. Okay, because what it means when it's squeezing, just think about it logically. Bollinger Bands are an average of price. It's showing you the average consistency of where price is going. So it takes the parameters based off, it doesn't matter which time frame. And then when it squeezes, it means that price doesn't know where it wants to go, obviously. So the Bollinger Bands, there's no consistency. So when they squeeze, how I want you guys to see it. So you see over, let me just do it, yeah. So you can, obviously can't ask if you guys agree or not, because you're not going to answer me. But you guys can, I'm sure you guys can see that it's squeezing here. Okay, when it generates a bubble like that, that's diverging. When it generates a bubble, it means that price has typically broken out. Okay, so over here, there's a bubble there, and price, boom, broke down. Okay, now they're squeezing over here. Now they're squeezing over here. And how to take these trades? Once price is squeezed, you look where price, first step, you look where price has closed out of the Bollinger Bands, and then you need to wait for price to close back in again. Typically the best way to trade it is if price closes out. So say for example it closed out, okay, that's, I would have seen as confirmation, but okay, yeah. So you guys, I'm sure you can see how it closed out of the Bollinger Bands over there. Okay, now closed out. Now we are waiting for price to close back in. The reason we're waiting for price to close back in, think of it as a retest. Okay, price is closed out, it closed above a resistance point, so that's showing you that that resistance, it's struggling to hold. And then price closes back in, and then it'll typically consolidate for a while, and then it'll break out. Okay, stop losses, guys. I haven't really backtested using stop losses because this is a strategy by itself. But if you are in a trade, it will work very well because it gives you that extra bit of confirmation. If you want advice on stop losses, the best advice that I can give you is put it underneath the median line, so the middle line. So over here, you would have put it when price closed out over here and closed back in, I would have put it over there. Okay, and then you would have been riding that trade. Jeepers. Okay, look how much profit you would have made there. From the top, 401 pips, which isn't bad. Okay, so here's a very nice example. Price closed out, closed back in again. You could have see how price closed out here and then closed back in. There's the middle line, so you would have put your stop loss there. Boom, would have gone there again. Okay, so this is a reason I don't want you guys to use this strategy by itself, because remember, trading, nothing is 100% certain. Okay, so see how it closed out and then closed in again, and then it just dipped. If you had looked at your trend and your level, your signal, so let's just mark that off over here, and then we would have looked at our trend from around about here. So you would have seen, okay, price is in a strong uptrend. Okay, but look at all of this resistance here. You wouldn't have entered the trade based off of that resistance, but I don't want to go too deep into that, obviously. But yeah, guys, that's the best I can do with the basics of this. The best way for me to explain is actually on this video, but the thing is, for me to explain, you need to have already back tested it and ask me questions. Okay, I've taught you the basics now. It's a very simple method to use. Don't use it by itself, please, guys. But I'm sure this helped you, and if you have any questions, you know how to get hold of me. Thanks, guys.